Hello guys and welcome back to the channel. So today I've done an interview with Kris Patel and he gave me a very interesting viewpoint about Palantir earnings. As you know, I just did a video about why I think Palantir is going to skyrocket after earnings, but Kris gave me a total different viewpoint and I think it has a lot of merit. So I want you to watch this before the earnings so that you know that it's also an option that they're going to bomb out. So if you want to know why, he has a very good reasoning. I want you to watch it. And as always, if you like this content, please make sure you subscribe to the channel and check out the Patreon link in the description box below, where I'm going to produce some exclusive content and you can go ahead and support the channel there. And Kris's channel is also in the description box below. So if you're not subscribed to him, go ahead and check out his channel. Enjoy this video. Don't you think that Palantir is sandbagging a little bit? Because it seems like when they give the short-term predictions, they normally always almost overdo it. Like when they give that next quarter, we're expecting this much revenue, this much margin. So far, as I've been following the company, they have always overdone it. And yes, if they do take away the 30%, that's going to be a big down catalyst for the stock. But if they reiterate because they took away in Q2, they took away this, that they're going to grow 30% this year. And if they would reiterate something like, yeah, the growth is back, government growth is back, don't you think that that would be a nice catalyst for the stock?
I think they're going to be very weary on trying to put out a lot of positive information, because the way that the macroeconomic condition is kind of presenting itself is that you don't want to risk over promising. It's easier to under promise and over deliver than the other way around.
It's very interesting. So that they would like sandbag more.
Everyone is everyone is doing it. Like every single company is doing it right now. Like they're all like, listen, don't expect growth in 2023. Like we just have a tough environment, whether you're talking about the semis with Micron, whether you're talking about the software company. Even Snowflake was like, listen, guys, don't expect more than 60%. If we get above 60, we're good. We're golden. Even though we're going to try to get 80%, 90% growth, if we can't, whatever. Because at the end of the day, the worst thing you can do is overpromise something and then you get like, oh my God, you missed by a significant amount. Is there something wrong with your business? So even if the growth prospects for Palantir are there, they're not going to emphasize them. If anything, they're going to say, let's just chill and and just give people a little bit of a pause. There's no need for Palantir to raise capital right now, which is usually the main reason why companies want to be exceptionally bullish, because that means that the valuation goes higher so that they can sell shares and generate cash so that they can operate their business. Palantir has no need for that right now. They're funny.
It's funny. I totally had this theory. Like if you put a gun to my head, like I would think that this earnings report would be very good and they would, jump 10 and 20%. But now what you're saying, it totally makes sense that this would be the time to really put the expectation down to the floor, because you're probably not going to get punished for it. And so maybe I changed my mind on that.
I'm not. Look. You never know. You really never know with this. Like there could be a time where it's just like, see, we were telling you that we are going to grow during bad times. Like so, this is a point where maybe they want to prove that, but I don't think so. I think they're going to ride this negative macro trend and use it as a pretext for slowing things down, right? I think more important for us will probably end up being what the growth in sales looks like. Like their sale, like I want to hear more about the business. Like what are they doing to basically capitalize on the negative downtrend? Like what are they doing different than their competitors in order to make sure that they can ride the growth higher once everything recovers?
Is there anything that would make you sell the stock? Like for example, if they come out with, I would be surprised if government would be not re-accelerating a little bit, but let's say it's still not 30%. Let's say if they come out and government is, I don't know, 23% and commercial slows, I think it was 46%. Let's say it slows to 35%. And
I think the negativity is already baked in, brother. I don't think there's anything more you can say to like at that point. let's say it goes down to $4. At that point, it's like, okay, you're a $10 billion company that's generating $2 billion worth of revenues and 500 million in free cash flow, and you've got 2.5 billion on the balance sheet. Like at that point, it's just retarded, you know. So
was it Sasha who said that what did you say? That I think it was like if you would liquidate Palantir and sell all the assets and patents and everything, you would get about $6 a share or something. And his, like, if you take the cash of the, I don't know how he came to that number, but he said something like this.
I don't know. Like my thing is in 2017, 2018, Oracle tried to buy them for 30 billion, right? So there's definitely a lot of value that we may not be seeing at the current level. So there's something to think about when it comes to software, where if it's essentially something that's going to be game changing, it's all about the eye of the beholder, right? Where basically the person on the opposite end, they have to, if they see tremendous value in your thing, then you have to throw all traditional metrics out the door. What does that mean? That means that, let's say, oh, you know, Palantir is generating 1 billion, 2 billion in revenue. Oracle does not give a shit about $1 or $2 billion in revenue to make their business grow. Their whole thing is if I'm getting the next gen technology, that's worth paying $30 billion for, which is a premium. Right? Because you're buying something that's next generation, and the total cost of researching, doing all the development to get that, plus the time that we have to spend in order to get to that level is going to be, it's going to be $30 billion. It's going to be worth more than $30 billion.
Yeah, and the
so
risk.
It's better to take it out. And the risk, right?
Because like they can grow up and become a potential competitor to Oracle and put them out of business. And
Yep. So in that regard, I think right now, if Palantir didn't have its F-class shares, there could be some companies fishing around trying to see if they could buy them out. You know, but because of the F-class structure, it's not going to happen. You know?
Which is good for us investors, because then you would really, like, all the people who are down, they would be, you know, forced to sell, and that was the end of story of Palantir.
Yeah, but see, management sees long-term vision, so that's one of the reasons why a lot of companies have had F-class structures, right? Where they don't want to be in a position where their stock takes such a tumble that these other companies that are way better in terms of capitalization can just come in and take them out. You know, I mean, look at what happened with Twitter, right? I mean, Twitter, a lot of people are giving their their former CEO, what's his name, Parag Agrawal, crap. But dude, this guy sold Twitter for $44 billion. He got Elon to buy it for $44 billion. Dude, you can hate his politics all day, but in terms of business, dude, the dude is shrewd. He got Elon. He G'd Elon. You know, is Twitter worth $44 billion? Hell no. Hell no. Hell no.
Yeah, exactly.